Hey everybody, welcome back to another episode here at Arthur Invests. So happy you stopped by. Now, this weekend was a wild ride. If you've been following anything happening in the world of cryptocurrency, you know that this was one of the most interesting, most anticipated, most highly speculated weekends of the last 2 years. Elon Musk being on Saturday Night Live was supposed to surge Dogecoin from, I think it was at 70 cents it was trading at, to over $1. A lot of would-be millionaires were going to be set up for success. And man, let's just say little Doge shit the bed. But anyway, this prompted me to start thinking about a topic I wanted to cover here. Over the past couple of years, cryptocurrency is in everything, right? If you talk to folks, at your work, if even if you're going, I was in an Uber a couple of months ago, and the Uber driver was talking to me about cryptocurrency. Coworkers, especially this weekend, leading up to Elon Musk being on Saturday Night Live, it's everywhere, right? So people are very interested in this space. In fact, I read a recent article citing that somewhere around 15 to 20% of Americans, U.S. households, own some level of cryptocurrency in their financial portfolio. Super interesting stuff. And so what I wanted to do today is just take a few minutes to talk through some of my thoughts on crypto. And I'm not one of these I'm not one of these guys who only thinks real estate is the only way to make money and to secure your financial future. That's just not me. Real estate is a vehicle. I happen to really like it. I understand it. But there's a lot of other places that you can make money and become very wealthy in this country, right? It's America. There's a lot of good opportunities here if you're willing to look. But nonetheless, let's take a few minutes here and walk through some of my high-level thoughts on, just the general thoughts of cryptocurrency. So here we go. So first off, I think it's important to set the context, right? If we're talking about cryptocurrency, why is it getting so much traction? Now, no doubt there is some underpinning technology. This whole blockchain piece is very unique, very interesting. And I do think long-term, that technology and this idea of being able to do financial transactions instantaneously through the blockchain is going to revolutionize the way we do big purchases and things like that in this country and in the world, in fact, excuse me. But why is things like Dogecoin and some of these other cryptos becoming so much more pronounced right now? And that has a lot to do with just kind of this overall posture of this middle finger Wall Street bets approach to investing, right? I've got a couple of headlines here, but really this idea that, look, we don't feel that the market is fair. And by the market, I mean the stock market. We don't feel like the stock market is fair, right? We know that, hedge funds have not necessarily added a ton of value in terms of what they produce in the market, right? They spend a lot of times thinking about how can they get, or the trading floors, how can they figure out how to get their connection to the different trading firms quicker, right? And so they're investing in the cable technology so that they can make transactions and trades within milliseconds, right? And so they're really figuring out how to play the game. And then we know there's inside trading happening. And so this traditional approach to buying and hold stocks based on value is just not as in favor as it once was. And even folks like Warren Buffett, right? What are they saying here about cryptocurrencies? You can kind of read his thoughts here. Basically calling cryptocurrencies intrinsic value pretty much zero. And so you have this old guard represented in Wall Street today that, look, cryptocurrencies, this whole thing of GameStop and shorting the system and all that, it's just not, they're just not getting that there's a whole new generation of investors who want to participate, right? They don't want to have to go through the traditional mechanisms, right? So when Robinhood came out and made the kind of trading component of investing free, right? You can trade and buy stocks daily without actually having to pay fees, which was the case up until a few years ago. This really lowered the standard for the average Joe to come in, Joe and Jane, to come in and to start investing into the market. And so when you have things like Dogecoin, there's a lot of new blood, new ideas coming into figuring how can we take advantage of these momentum plays to really gain wealth. And so that's really where the start of this idea of momentum investing came in, right? Getting on the pack and collectively herding together to try to drive the price up on something and to collectively win. A little bit unique. Now, this is not not new, but what's new now is that kind of the barrier for people to collaborate in terms of, things like Reddit and Facebook and other platforms that allow people to congregate have really started to make it a bit of a challenge, right? If you followed any of the stuff that happened with GameStop, some hedge funds had a big black eye because they aren't the only players in town. Now, you can argue whether or not the little guy actually has weight and power because there are a bunch of individual investors versus an institution. But nonetheless, this idea of momentum investing is coming on the market. And then, another thing that's come up is as Robinhood and these other apps have somewhat gamified or lowered the barrier of entry. There's a little bit of an interesting definition, right? You talk to friends, you talk to family, when they have apps like Robinhood and the like. There is this belief that they are investors, and look, maybe they are. You invest however you think about it, but there's a big difference between a speculator, somebody who is buying something and holding it for the assumption that it is going to have a higher value down the road. They will sell that value and then realize a return, versus an investor who has a fundamental understanding of the underpinning business and can start to realize a business case on that investment. So it's a very different approach. One is kind of sight unseen. There is some level of investment in Bitcoin and Dogecoin. I'm not going to say that, but there is a high level of speculation, which is why you see so much volatility in that space. So we'll keep going here. We're going to talk a little bit now just about the stability versus volatility, right? I talked about momentum investing. There's just a high risk, high reward premium, right? You have read the stories online about people who have amassed quite a bit of money just by making a couple of good bets. And that's a little bit of the mentality that I'm referring to when I refer to folks that are highly speculative, right? It's more of a bet and less about a stable idea about a long-term return on this. It's just kind of, let's take the hit, let's move on. And so I've noticed that a little bit myself. And the long-term value play is something that is a little bit missing. Now, I will say, I do think things like Bitcoin and Ethereum, and I'm not sure about Dogecoin or whatever, but these coins do have intrinsic value over the long haul. What we're going to find as this market becomes more mature and this asset class becomes more mature, there's going to be a few winners. We're just in the very early stages. Now that excites people, right? You have an opportunity to get in on the ground floor, but it's very, very difficult to see how things like government regulation, the crazy level of speculation. And my guess is the more speculation we see in the space, the more governments are going to feel the necessity to step in and protect investors from themselves. So, we'll see how this plays out. But I do think the underpinning value of the blockchain technology is very important. And I do think that's going to be something here to say. So if you're asking me, Arthur, what do you think 10 years out? Yes, I think Bitcoin, not Bitcoin, I think crypto is going to have a space in our portfolios. I'm just not sure which one is which. That doesn't mean people can't make money in the short term. That's just saying I don't know enough about the players to be able to make a good call. Now you can take a couple of, $1,000 or however much you have, and you want to put it in the market and see which one will win. Hey, look, that's completely up to you. But those are the reasons that it makes me a little anxious or makes me hesitant to move, just because of the volatility. But let me give you some of my thoughts on the challenges, right? So if you're a family member and you have maybe 50,000 or 20 grand and you want to invest, and you're thinking about, hey, should I do it in crypto or some other asset class? These are some of the things I would share with you as a way to maybe kind of think about where you're putting your money, right? So the first would be around the high risk, high reward. Look, are you comfortable with whatever amount of money you are putting in the space to go bye-bye, right? High volatility means you can lose everything and you can triple everything. There's just no way to know. So you have to be comfortable. Take that gut check. Are you okay? Everyone likes the idea of Dogecoin going to $1, but nobody likes to see it go back to 0.5 cents or something of that nature, right? So you have to be comfortable with walking away from the money. Or can you take the profits off the top once you do make some money? Right? People want to stay a little too long at the blackjack table and it goes bye-bye. So, do a gut check around that. But one thing I don't love is the fact that there's no leverage, right? If you're going to buy a piece of real estate, for example, you have a partner in the bank. The bank can come up and say, hey, look, if you're going to invest $100,000 in this property, we'll give you 75 grand to support your purchase. With crypto, you want to invest 100 grand. You're all in on 100 grand. There is no other resources there that you can pull from to make that investment. Very similar to what we think about when we think about stocks, right? So I don't love that. The other piece I don't love about this type of an investment class, and this goes the same for stocks, is there's not really a value add opportunity. So you're saying to yourself, what does that mean, Arthur? What's the no value add opportunity? Well, with a piece of real estate, you can buy a 2-bedroom house. And if one of the bedrooms is big enough, you can maybe divide that room in half. And now you have a 3-bedroom, 1-bath. That if you can put a closet in it, that might actually raise the value of a property. Or you can enclose a garage and make that another bedroom. Or you can add a second floor. Or you can subdivide the land and build another parcel in the back and sell off the individual units. There's a lot of things you can do to manipulate the value of an asset like that. With a cryptocurrency or with a stock, you purchase it and it is what it is. That's it. Hopefully you bought low and hopefully you sell high, but you have no control over manipulating that. And you don't have a way to rent that out to somebody. You can't let somebody borrow your cryptocurrency for a year and then come back and take it on. You 100% own the asset and you're 100% responsible for it as it goes through the system. So think about that for a second. And then the other piece that I would say is that there's really not any tax incentives. And whether you stand on the right or left of your political party, it's just clear that real estate is far and away one of the most tax privileged assets in the financial market. You really can't compare it to anything else. You get a loan, but you get to write off the loan. You get expenses, you can write off the expenses. You have mortgage interest, you can deduct that against your total profit. You make a profit and you want to sell it, you can do a 1031 exchange. Now, that may change, but for most investors that are at the kind of residential level, probably won't change much for you. So there's a lot of tax incentives to be considering here. And so these are things that, in my opinion, make crypto a little less interesting to me, at least right now. Maybe when the market becomes a little more stable and we can kind of see where the winners are, what we understand kind of the kind of roadmap for where this is going, I will feel more secure. But I will own cryptocurrency in my portfolio, no doubt about that. I just feel like the water's a little too crazy for me, and I would rather have something I have a little bit more stability and something I understand and how I can manipulate. So these are just 4 things that I thought of this morning that I wanted to share with you. Hope you enjoyed this thoughts. I am by, again, no means an expert when it comes to cryptocurrency, but these are just some things I've thought of as kind of your average Joe working in 9 to 5, investing in real estate and trying to think about what the possibilities could be with other asset classes. So hope you enjoy this. If you're interested in learning more content, feel free to like and subscribe, put some notes down in the comments. Appreciate your time, and I will chat with you guys on the next one. Take care.